Hello, Jeff Green here again, and welcome to another Monday update for conditions in the Arizona real estate market. We're going to go through half a dozen topics. This week, we're going to take a look at the average rental rates that have been somewhat stable for 18 months. So if you've been getting rent increases, perhaps it's time to start looking at owning your own place. I don't think rent's going to go down significantly, but we'll take a look at that on the chart. Homes for sale have been dropping for 2 months, and I think that's really been contributing to our more stable market here in the Metro Phoenix area. And I think this is due to holidays and the fact that interest rates have slowed down purchases. Nobody wants open houses during the holidays very much. So, and also canceled listings are about average. We'll take a look at a chart that shows that. Contract ratios are low but stable at the current amount. Now, a contract ratio is the number of sales, contracts that end up in sales versus houses on the market. So they're stable, lower than they were, but they're stable. We'll take a look at that chart. Days on market are about twice the amount of a year ago. I don't think that's unexpected by anybody. Long gone, or at least for this turnaround, long gone are the times where you could pound a for sale sign in your front yard and get 15 offers by 5 o'clock in the evening. That was a crazy time. Overall market strength has been increasing for about 3 months, and I'll show you that on the regular chart that we look at every week. I think that if or when interest rates drop, provided that nothing catastrophic happens between then and now, I think this market's going to, at least in the Metro Phoenix area, going to take off again. So we'll take a close look at that chart. So here we go. Let's look at the average rental rates. And you can see from this chart that the average rental rates have been stable for, let's see, 1, 2, 3, 4, 5, 6. Well, you can count that up. So early to mid 2021, it sort of reached this peak here and then sort of pulled back, got up a little bit, pulled back. So we're sort of in this range, $1.33 to $1.35 per square foot on the average. Now, if you go back to 2015, you can see that in some cases, the average was below 80 cents per square foot. That's a phenomenal increase over the last, 8 years, and especially since mid 2020. So if you're a long-term investor, it was an awesome time to buy a home back in here because look, your rental rates have gone up by about 50%. So we'll watch this and keep an eye on what happens, and so that's where we are on the lease price per square foot. Let's take a look at the active listings. This is the weekly count. So this last one was done, as you can see on the date here. The last one was done on the 11th, which was yesterday, I think. And really, I want to take a look at this number here, 17,321, which is the most recent data point in 2022. And look where we were a year ago, right? So right in here, about 5,500 listings on the market. There was no supply during 2021 for a large part of the year, and that was one of the components that drove prices up so heavily. Now we've got, so what is that? That's a little bit more than 3 times, but they've come down. So 1, 2, 3, 4, 5, 6, 7, 8. For 8 weeks, the available listings have been dropping, and they're now at about where they were in week 31. So the inventory has been dropping, and that has sort of helped keep the prices a little bit more buoyant in the Metro Phoenix and Arizona area. So we'll keep an eye on that and see how that drops down. I think this is a seasonal and interest. People want the old prices. So they're sort of saying, you know what, I'm going to take a couple of weeks break here. Maybe I'll put it back on the market in the spring. So that's where we are on the listing counts per week. Let's take out the listings canceled per week. And this is a pretty jagged line, you can see, but I highlighted the last 2 years here. The blue line is 2022, and the orange line is 2021. And you can see here that almost no listings were canceled towards the end of last year. But you can see this line moves sort of all over the place, and you can definitely see a trend in the market towards listings being canceled towards the end of the year. And that's the effect of the holiday season. Like I mentioned, nobody wants to keep your house pristine while you're having parties, and you don't want people trooping through your house while you got all your decorations up and that sort of paraphernalia. So we expect this and the seasonal trend to drop down. And then if you look at the beginning part of the year, if you look at week one, everybody floods the market. Hey, I want to sell, I want to move. I wanted to move last year, but now I'll move this year. So it remains to be seen whether we'll get this sort of an increase in supply in early 2023. So like I mentioned before, subscribe, like and subscribe to this channel, and we'll keep providing you with the information that keeps you updated on the Arizona real estate market. The next chart has contract ratios. Now, this is a measure of how many listings actually take place versus the number of listings that are available on the market. And you can see now we're at 342 closings for every 1,000 on the market. And it's been pretty stable here ever since the middle of the year. This, of course, was the big run up in the early part of the year. And then it sort of tapered off June through the summer. And now we're sort of wandering around this 360, we were 365, 400, and 342. So they're lower. Well, we all understand the market has slowed down quite a bit. But they're sort of stable at this level. If you want to see prior years, it's a little bit more complicated to show it on this chart. But if you want to see prior years and how the contract ratio worked for us in prior years, just don't hesitate to give me a call. Okay, the next chart is going to be contract ratio heat map. So back on this chart, these are all the contracts, and this is how they sort of reflected on the Metro Phoenix area. So the green, if you look at the middle here, 30 to 60, that's sort of a balanced or a warm market. And you can still see that are many, many areas that are still in, a warm market. The blue are a little bit cooler. The outskirts are a little bit colder. These are the way out there sort of thing. This is like vacation property up in hills, that sort of stuff. Not so much developed. But the bulk is still fairly warm across Metro Phoenix. Now, the blue areas are cold, right? Does that mean prices are going down in those areas? Potentially. And if you're interested in your zip code or your neighborhood, don't hesitate to give me a shout. You see, there are a couple here that are still hot and hotter. There's no market areas in here that I can see are insane, but this is the way we are today. So this area in here, which I think is Paradise Valley, North Scottsdale, that sort of area, that's still fairly hot. There's another one here on the west side, which is insane. Would have to sort of poke. It's not insane, but it's a little unusual. And then this little strip in here, which is 85014 or something like that. So that's sort of the center of Phoenix. So in general, it's kind of a warm market, cool market. And that sort of reflects, you'll see a slide coming up here that sort of summarizes this whole chart in a very good sort of dial form. So let's take a look at the next chart I have for you, which is cumulative days on market. Now, everybody knows the market's cooled down since the frenzy of last year. So this is 2022, this sort of purplish line, and then the red line is 2021. And you can see how crazy it was around the middle of the year. This was the time period where you could put a for sale sign in the front yard of your property, and you'd have to fight to keep people away from giving you a contract. I mean, it was nuts. It really was crazy. So since then, we've doubled up to 68. Now, there's always some debate about what's a balanced market, and a balanced market certainly is somewhere, I would say, between 60 or 90 days, 60, 80 days, somewhere in there. But there are also other aspects that you can look at to determine if we're in a balanced or a seller's or a buyer's market. And that chart's going to come up here in a bit. So this is where we are. Days on market 68. If you're selling, expect to take longer than last year. You got to remember that within this 35 days, there were some 1 day, 2 day, 3 day days on market before a contract. So this is sort of where we are. Again, it reflects a little bit of seasonality, and January might turn that around or drop it off. So we'll keep our eye on that statistic. And this is the summary. This is the Crawford Index, which gives us a lot of insight across Phoenix Metro and summarize it in a very good chart. Now, if you want, like I mentioned before, if you want your neighborhood supply and demand index, or you want comps or anything like that, don't hesitate to give me a shout. This is a broad measure, but it's a very good measure of the sort of temperature in across Metro Phoenix. So let's look at the middle here. Last week, that was 85.5. So we've gone up a little bit. And if you look at the market index trend, this chart is reflected in this dial. So you get the This is like driving on the freeway at whatever you drive, 89.7 miles an hour maybe, but it doesn't show you how fast you got there. That's what this chart is. This is the movement, this is deceleration, and of course this is acceleration. So you can see that we hit this low, what does that say? In the November timeframe, right? November, right around Thanksgiving, the market index trend was, at least during this period, was at its lowest point. Since then, we've had, gosh, that's about 3 months of increases in strength in the market trend. So 100 is about balance between a buyer and seller. We're at 89.7. We were at 88.5. So what this market index does, it assesses the supply with the demand and comes up with a bottom line number. Now, let's take a look at the supply. I've told you that the amount of homes on the market have been decreasing, and you can see that over here. So it's very relatively low supply on the market. And you can see that trend has been just dropping. So there's less houses to purchase. Now, there are less buyers out there. Look at the demand index. You can see that it's down to 71.7. So it's kind of weak. And I think we all realize why. End of the year sort of stuff, and interest rates, and worry about a recession. So it's dropped the demand index. And you can see that here. It looks like it's stopping its acceleration downward, but it's still dropping. It dropped for the last couple of weeks also. So this index here takes the supply index and combines it with the demand index and sort of comes up with a market index. And depending on, I have a number of services that I subscribe to that allows me to cut these numbers a number of different ways. So I think we're close to a balanced market. I don't see prices crashing, and I've posted a lot of videos on that topic itself. So what are the key takeaways from this week's update? So like we talked about, average rental rates have been somewhat stable. Homes for sale have been dropping for 2 months. Cancel listings are about average. We're not seeing a huge turmoil in increasing sales. Contract ratios are certainly low, but they're stable. Days on market are twice the amount of a year ago. And overall market strength has been increasing for about 3 months. So if you're currently renting and worried about your next rent or next rental period, you might want to investigate using that rent to pay for ownership. I did a video, gosh, it's got to be a couple of weeks ago, about the long-term strength of owning your own house and how it builds wealth. So watch out for this. I think if a recession is not too bad, I think if interest rates come down, I think that prices will shoot up again. So that's what I'm thinking. So if you want more information, you can always log on to my website at jeffgreenrealtor.com. You can find a whole wealth of information, including links to this video channel. You can subscribe right here to this YouTube channel with this link. And then if you want to stay updated, just go to this link and subscribe to my newsletter. Okay, that's it. I hope this is helpful for you. If you're looking to buy, sell, or invest in Metro Phoenix and across Arizona, don't hesitate to send me an email or give me a shout. Hope this helps. Talk to you later. Bye-bye.